you see? You're my delight. Lady, I just feel like I won't get you out of my mind. I feel love for the first time, and I know that it's true. I can tell by the look in your eyes. Give me tonight, 'cause my feeling is just so right. Lady, I just feel like I feel love for the first time. Lady, hear me tonight. Can't you see? You're my delight. Lady, I just feel like I won't get you out of my mind. Lady, hear me tonight, 'cause my feeling is just so right.
Hello guys, welcome back to another video. In this video, we're going to cover the TGIF trade we just took. And it all starts off on the daily chart. The daily chart's always going to give us the narrative to frame our setups where we go on the 1 hour, 15 minute, or even less. And if we don't start on the daily chart, then what we do on the lower time frames basically has no context, and we're basically left clueless. So that's why it's always key to start on the daily chart. So what do we have here on the daily chart? Well, we can see that we're retracing back into this range, into a premium market. So my bias was looking for longs into a premium at the start of the week. But at the end of the week, we already hit a key resistance level, and if you could see here, we've taken out a key high. Why is that high key? Because it's an intra-week high, and we'll get into that when we look on the 1 hour chart. But just note that that has a lot of liquidity around it as well, since it's based on the daily chart also. So we're back in the premium market. We're back into this fair value gap. That's why I said, alright, my bias now isn't so much bullish. Okay? It's bullish when prices are in a discount. But the moment we start going into that premium market, I start looking for sell scenarios. So now let's jump into an intermediate term perspective so we can see some more framework. And that's when we jump into the 1 hour. You can see the 1 hour has so much more details for us to see price action. So I'm going to go ahead and bring up my drawings for the 1 hour chart. So here's what I had for the 1 hour chart. And earlier this week, basically yesterday, I took longs based on this market maker model, which completed. Now, when a market maker model completes, that's the most extreme prices in terms of premium discount. That's the most extreme in premium. So we're very in a premium when we broke above this high, and we're in a premium when we're trading into that daily fair value gap. So that gave me signs that, alright, this is too expensive. We're gonna need to retrace, and I'm gonna capitalize on that retracement. But what really gave me that idea that, okay, this is going to retrace, and that is TGIF. So TGIF is when price creates the opposite side of the weekly candles range. And this happens when Friday basically just trades higher, right? So I'm going to mark out each individual day, and I'll show you how Friday traded higher and how that sets the stage for TGIF, because on Fridays 90% of the time price is not going to continue with the trend. Okay guys, so you can see that since Monday the trend was basically going higher. Higher here, retracement, taking out intra-week lows, and then we trade higher on a Friday. This is where it gets a little bit tricky. When we're looking at midnight candles, this is not Friday. Okay, when we're looking at the midnight opening, this is not Friday. But if we look at the standard opening, you can see that here it is considered Friday. So what I did then was I considered that Asia created that Judas swing, which I will show in a bit. Asia created that Judas swing on Friday, completed the market maker buy model, and since it was the most extreme prices in terms of the premium, since we're in this daily fair value gap and we just completed the market maker buy model, if I saw any signs that this wanted to retrace, I'm taking that. So we're back to the framework here. I'm just going to remove this fair value gap since we know it's in a premium at this point. And if I know that this thing's going to retrace, it's going to be hunting some sell side liquidity. So that's when I was finding a dealing range for me to find liquidity in. And the dealing range was the previous day's low to the current day's high. So I'm marking out premium and discounts, and I'm looking for an internal range liquidity exit in a discount. So I had London closed lows, I had New York closed lows, and I had this meme line, which we'll see on the 15-minute chart. And I was using the previous day's lows as a draw on liquidity, because who knows, since we're in that daily time frame level, this thing could just snap lower, right? So I had the previous day's lows as a draw on liquidity, and I had these as partial exits. But then I remembered it is a Friday. I don't want to hold for too long. I just want to get in and get out, because if I did hold for too long, I'd get punished. And that's what happened here. I got stopped in profit basically, and that's because I got too greedy. But it was a profitable trade nonetheless. So the moment price took out this liquidity pool here in Asia, I saw that as a Judas swing for the standard opening price. So the standard opening price, once again, is when you look here and you have your standard opening prices at 17.00. Its opening price is at midnight. But since Asia created this Judas swing and completed the market making buy model, and it was a Friday, I just said, okay, that's the Judas swing, that's the high of the day already. Then when price closed back below this order block, I was looking for a short entry at that order block, and then targeting internal range liquidity in the form of these lows. So now let's go into the 15-minute chart. So we're here in the 15-minute chart now. We can see a great amount of detail now. And we can see that this Judas swing acted as a long inducement. Now when you see bullish candles like this, especially when the week's been trending higher, a lot of retail traders want to chase that. So being taught the trading methods I know nowadays, I'm trying to be on the opposite side of what the emotional traders do. So if there's long inducement here, I'm picturing in my mind where their stop loss is going to be. The first area is in the discount. There's going to be London closed lows, New York closed lows, and since we can draw a very beautiful trend line here, I thought that this was going to be attacked as the target. But you always have to take profits whenever it's available on the Friday TGIF, and since the weekly candle closes is coming up very closely, you just got to be nimble with it. So on the 15-minute chart, I'm going to show you how I managed this trade and why I closed 70% of the trade here and got stopped out 30% here. First of all, here's that long inducement, trapping everyone in. I then got that order block here, this last up candle. Got the mean threshold of that, and I saw, okay, price reacting off that beautifully. Closed back below. We're in that 1 hour order block, which is this red line here. And it printed a fair value gap with another order block. So I said, okay, that's a spot on high probability order block. Since we're in the London close session here, we have a fair value gap and we have an order block here. I'm going to take a short, targeting these lows here. And whilst price is moving down, every time we print a new fair value gap, I was marking this out and I was managing it. I wanted to see price sell off from that point on, sell off from that point on, and we all did until we came back into a discount, which is below equilibrium. You can see that, okay, now I have to start managing this trade very close and stop being nimble. I'm not as nimble as in the premium, but the moment we go back into a discount, okay, that's when I have to be nimble. So that's when I started looking on the 5-minute chart, and I started taking profits below this low here, and then when price here. Now I wanted to see price initially sell off from this fair value gap and just continue down towards my New York lows and then that meme line low. But I didn't like how prices didn't react beautifully off here, and so I let it maximum go all the way up into this fair value gap, and that was it for me. So you can see in the video, I put my stop in profit all the way up to this high, and that's when I got stopped on profit with this candle here. Now, ideally what I wanted to see was this just hit this and continue lower. But like I said, guys, you really don't want to be holding for too long, and you really want to be nimble for your trades on a TGIF. TGIF is not the trade that you want to be hitting home runs with, essentially. You just want to make a little extra on what you've made for the week. So for the week, I managed to long here, exit here, long here, exit here for a total of 75 pips. And on TGIF, we managed to grab another additional 40 pips. So that's 115. 115 pips for the week. And it's great that that's a big difference from 75 to 115 pips, all because of TGIF. And that's how you should treat it. Just treat it as that little bonus salary and carry on for the next week. So, huge shout out to my mentor, the Inner Circle Trader. If it wasn't for his teachings and his efforts in all the videos that he produces, I wouldn't be able to do this. And quite honestly, I don't think I would be a trader today. That's a guarantee, actually. I don't think I would. So, huge shout out to my mentor, the Inner Circle Trader. If you haven't checked out his channel, make sure to check out his channel. And also, subscribe to his channel. Subscribe to mine as well. So, you can get informed and updated whenever I do these types of walkthroughs if you find them useful. So, that's it for today's video. I'll catch you guys on the next one. See ya.